actually, if we kind of step back a little bit, what we are saying is that there's a relatively high chance of a cyclical recession. So it will be kind of a shallow recession that we're looking to see, probably in later part of this year or beginning of next year. And the time zone we're talking about is about 12 to 18 months. There is still about 30% chance of a soft landing when we're doing our analysis. I think one of the key kind of underlying themes that we're seeing is that, yes, inflation have peaked, but at the same time, we do think that some of the inflation data are still quite sticky, particularly on the labor market imbalances. Some of the kind of housing is still relatively high. And that's why we do think that if we kind of focusing on the endpoint in about 12 to 18 months time, there is a relatively high chance of a shallow cyclical recession outcome.
Does that assume that we're going to see a terminal rate Fed funds at 6%?
Well, I think that's probably not exactly at 6%, but what's likely to happen is that the rates will probably stay a little bit elevated and slaying higher longer than the market anticipate. Which means that when it comes to kind of fixed income allocation, investors will need to kind of make a decision whether they wanted to take a credit risk or whether they wanted to take a little bit of a duration risk, which we think that at this juncture in time, the duration risk is looking more interesting than the credit risk, particularly if we're looking at a potential of a kind of shallow cyclical recession later part in this year or beginning of next year. It would mean that there could be some kind of credit impact and credit quality impact looking ahead as well.
You're leaning more on duration. So in translation, it seems like you're saying, look, investors are probably better off, given the risk that we've talked about, locking in what they can now.
Yes, that's why what we're seeing in market is that some of the high quality investment grade paper, kind of regardless of what kind of geographic location, whether US, Euro, or in Asia, get a lot of kind of demand and appetite at this juncture in time. Base rate is high. The kind of overall yield that you're going to get from these high quality credits are pretty interesting. So most of them actually stay in relatively the kind of shorter duration in order to capture that kind of attractive opportunities in the market at this juncture on the IG space.
Hi, I'm Emily Tan, and thanks for watching CNBC. You can check out more of our videos by clicking on the boxes on the screen, and don't forget to subscribe to the channel for more. Thanks for watching.